Live from Lagos, Nigeria's financial powerhouse. This is Business Incorporated with me, Bosin Amafaye. We thank you for joining us at this time. On the show today, South Africa's telecoms giant MTN Group expects to report full year 2016 loss due to $1 billion regulatory fine in Nigeria and underperformance at its home country. Meantime, the International Monetary Fund is optimistic about Tunisia's economy, looking to 2.5% growth pickup in 2017. And Saudi Aramco picks an advisor for its initial public offering, but the Tadawul Stock Exchange treads water. Let's get started. We begin with the stock market. Starting off with continental Africa, the Nigerian All-Share Index was trying to retrace earlier losses of the week, showing some green shoots around midday local time Wednesday. Meantime, the Egyptian market still red hot, more than 1%. The South African GSE saw a weakening at about 1 o'clock Nigerian time. Intraday in South Africa on the GSE group, about 0.75%. Some of the key markets indices in the red. On the Kenyan market, a bit flat, 125.00 on the main index. Moving on to the Middle East, where independent investment bank Merlis and Company has been selected as an advisor for the planned initial public offering of Saudi Aramco. The state oil and gas company last month invited banks to pitch for an advisory position on what is expected to be the world's biggest initial public offering. Today, Merlis' advisory deal, however, failed to move the Saudi stock exchange, posting nearly 1% decline at intraday. Meantime, Abu Dhabi was in the green, very solid. The Dubai financial markets, about 0.2%, about 12 o'clock Nigerian time, and about 0.65% for the Qatar Stock Exchange, holding to that 10,600. A bit softening there, however, over the past 2 weeks. Let's cross over to Europe, where geopolitical concerns continue to dominate markets, with investors stocking up on gold and other metals and pressure mounting on the supranational currency, the euro. However, earnings reports remain the main market drivers. Meantime, the International Monetary Fund has warned that Greece once again risks a Eurozone exit amid stalled bailout talks. Let's get some perspectives on these developments as we bring on the show Annette Westback, who is DWTV financial correspondent for Channels Television at the Frankfurt Stock Exchange. Good afternoon, Annette. Thanks for coming through. Let's get started. We will all spend more time about Brexit, that it looks like we've forgotten about Grexit. Now, the IMF is reminding us once again that, hold on, folks, don't get carried away with Brexit. There could be Grexit. Talk to me, Annette.
Well, actually, we are again in a place where we can talk about the coming back of the Greek debt crisis, I would say, the third bailout program under which Greece is currently operating. It's highly contested by the IMF and also the Eurozone where to go next. So the IMF is officially not taking part yet. The Eurozone countries they want the IMF to be on board in order to be able to disburse more money, but they have very different understandings of what needs to be done with the country. The IMF wants to have a hard haircut for the debt, the outstanding debt pile of Greece, whereas the Europeans are saying this is politically not feasible for their individual governments, and that is why they can't agree on anything right now. The deadline, again, at least in the short term, is February 20th, when everybody comes to one table and tries to find a compromise here. It's not easy, though, to reach a compromise on that matter, because the two parties come from very different ideas. What is actually happening right now in the markets, that yields are on the rise again, and that debt crisis for Greece is actually back.
Yes, okay, but let's come back to Germany, where you are. It doesn't look like the departure of Jeffrey Irwin, the head of Deutsche Bank's investment banking unit. Doesn't look like Jeffrey is the first casualty of the fallout of Deutsche Bank's unpleasant 2016 numbers or earnings, as it were, because of, again, being slapped left and right from the US, from the UK, as far as market misbehavior was concerned.
Well, actually, what we're seeing is that Deutsche Bank is still in restructuring mode, and what I've been hearing here, that is Markus Schenk is planning on taking over the responsibilities of the co-head of investment banking. Markus Schenk, of course, is the CFO of the company, and he is a rising talent there. He came from Goldman Sachs, was a CFO of one of the biggest utilities here in Germany, and he is, I guess, more or less moving into the new position. He is a close ally also of Mr. Krein, who's the CEO of Deutsche Bank. And I think what's happening currently is that Mr. Krein, the new CEO of the bank, is rallying his troops behind him, and that those who are not really fitting into that team have to leave.
Interesting. But again, it's been an earnings season. We're still getting into the middle of that. Some of these are coming through from the healthcare sector, Sanofi. Of course, a big name in the European healthcare and globally. And of course, another major European company, shipping and logistics giant, Maersk, what we call the Maersk line. These are two different companies, but giants in their respective industries. Annette?
Yeah, that's clearly the case. We have Sanofi reporting. Actually, the earnings don't really look that great, but still the investors are taking it quite positively. We had the shares up to 3%. So what happened is that Sanofi is not in a hurry for more deals. In 2017, they were saying, you know, they lost out to buy Actelion, a Swiss bio company just recently, which they hope to buy for, of course, also quite a premium. So the results in the fourth quarter were hit by higher taxes and one-off charges, and still analysts are liking the results, though they are not really great. On the other side of the medal, we have Maersk, you were saying, a Danish shipping and oil company, whose results were actually taken really badly by the market. The shares are tanking by almost 7%, and that is because they actually are